Now, my stock of the day is in the news today as well. It's from the lithium space, the much loved lithium space. Allkem today came out with its quarterly production update. And so it earned $298 million in revenues for the quarter with a gross cash margin of 82%. It says that it's entering a period of significant growth with its Nara lithium plant, probably didn't say that right, under construction. But share price is getting hammered today. Why? Because it's seen project delays, it's seen cost increases, so output is down. And yeah, I think it's one that's worthwhile speaking of because this is such a hot area of the market. Junbei, what does the team there at Tibeca think of Allkem?
Look, they like Allkem with across the whole lithium space. It's low risk, a much lower risk, high quality asset. Yes, production costs a bit higher, but it's really what drives those companies ultimately the price, and that still remains very, very elevated. So our team like it within the space, but I'll throw in my view here. So this is a volatile market. You have to be very careful. A lot of hot money going in and out. And this company has done very well. I think PLS is probably the best performing in the last month or so. PLS, the Pilbara. PLS went up, adjusted for its beta, so volatility, it went up 50% in September relative to a lot of stock went down 20 or 30%. So it's a massive outperformance, and that suggests to me, and if you take it over the last 12 months, these companies have performed incredibly well. So be really, really mindful of just all that hot money. Because a lot of other sectors now represent significant amount of value, and to me, I'm a profit taker. I'm taking profit across the sector. I will probably still be positioned in the likes of mineral resources, a little bit cheaper, and the catalyst, splitting out lithium and things. But net, I'll be taking profit across these names.
Yeah, because it dovetails so nicely with what you were speaking of before. You want to look for those companies that haven't had that exponential growth, that are poised to benefit when the markets turn. So would you, Adam, be a profit taker in some of these lithium companies?
Well, we spoke about one yesterday, PLS. I agree with Junbei, taking some profit where you can. I think it was up 113% or something like that. Something ridiculous. So yeah, why wouldn't you take a little bit of profit? Allkem for me is a fantastic business and is now joined together. So all of that stuff, the Mount Catlin is the biggest of their productions. But the market overall, China had 1.9 million units of electronic vehicles produced in the quarter. That's up 107%. So in other words, EVs is moving very, very quickly. And also they've got around about 447 million in cash at the moment. So Allkem is definitely fully strength or capitalized. One of the things that we do look at is, you're right, their forecast production was down to 140,000 tonnes, so that's why the market potentially is giving it a little bit of a whack today, because it was a little bit of a downgrade. But their cost of production is $900 per metric tonne. Now, they're selling that into the market at around about $5,000 a tonne. So even if you've extrapolate that 140,000 tonnes, at those, it's some good money that's still coming in, and that market still seems to be looking really well. I'd be comfortable with this one. Junbei's taking a little bit of profit. I like IGO. I think that's probably the better one in the space, and we've got a lot of clients in Min Resources as well. I think Allkem you'd be okay to hold. I don't think there's anything too out there that's on that, and hopefully these quarterlies keep coming in and they can still keep those margins high. So I'm comfortable with Allkem, happy to hold.
Okay, so I'm going to call Allkem a hold for you both.
It's a hold.
Yeah. Okay.